Imagine waking up to a morning that feels slightly off. The air is still, but something in it hums with unease. You grab your phone, the screen lights up, but your banking app won't load. You frown, try again. Nothing. You walk to the ATM down the street. A paper sign flaps in the breeze. Out of service. Shops are open, but no one wants your card. Gas stations demand cash only. Rent is due, but your landlord shakes his head. No transfers today. At first, it feels like a glitch, a momentary hiccup in the system. But as the hours stretch, you start noticing faces, worried, pale, restless. Crowds gather outside locked bank branches, their murmurs turning to shouts. Inside supermarkets, carts overflow as people cling to what value remains in their crumpled bills. The TV blares an emergency broadcast. The financial system is under review. Then it hits you. Your money isn't where you thought it was. It never really was. Those numbers on the screen, that comforting balance, gone. Just like that. It sounds like a nightmare. The opening scene of a dystopian film, but it isn't fiction. It's happened before. Not in distant, unstable nations, but in countries that called themselves modern, safe, secure. And when it happens, life doesn't politely pause. It fractures. The rules of survival rewrite themselves overnight. Take Argentina, the year 2001. Years of debt and political chaos had hollowed the economy. Citizens, desperate to protect their savings, rushed to withdraw dollars. Banks bled deposits. And then the doors slammed shut. The government called it the corralito, the little corral. But to the people, it was a cage. Withdrawals capped at 250 pesos a week. Dollar accounts forcibly converted into devalued pesos. Overnight, lifetime savings became nearly worthless. Families that once felt secure found themselves standing in bread lines. Business owners wept as decades of work vanished. The streets filled with the sound of clanging pots and furious chants, a chorus of betrayal. That's what happens when banks close. Money doesn't just disappear on paper. It disappears in real life, where bread, milk, and rent suddenly cost more than you have. And Argentina was only the beginning. Cyprus, 2013. The European Union forced a bailout deal that froze every bank account in the nation. Deposits over 100,000 euros were raided, seized outright, to save collapsing institutions. Ordinary people woke up to find their life savings used as a bandage for someone else's wounds. Businesses couldn't pay employees. Retirees couldn't access pensions. Parents couldn't afford tuition. The middle class watched as the ground beneath them, trust, stability, normalcy, dissolved into sand. In Lebanon, 2019, history repeated itself with cruel precision. Banks limited withdrawals to a few $100s a month, no matter how much you had saved. People stormed branches, not with paperwork, but with guns. Desperation turned to rage, and rage to chaos. Everywhere, the pattern was the same. What you thought was your money was never truly yours. Even the United States, the model of modern finance, wasn't immune. In 1933, amid the Great Depression, President Roosevelt declared a nationwide bank holiday. For 4 long days, every bank in America was locked. Businesses couldn't pay wages. Families couldn't access savings. The world's richest nation froze, waiting for reassurance that never fully returned. When the banks finally reopened, the illusion of control was restored. But the truth had already been revealed. The system survives on faith, and faith alone. Because the harsh reality is this: banks don't actually hold your money the way you imagine. They hold a fraction of it. The rest, loaned, leveraged, multiplied, until only confidence keeps the illusion alive. And when confidence breaks, everything burns. That illusion, that quiet agreement between trust and denial, is what keeps the entire system standing. Banks operate on what's called fractional reserve banking. For every dollar you deposit, only a small slice stays in the vault. The rest is loaned out, reinvested, turned into credit, debt, and promises. Your $1,000 becomes someone else's mortgage, another person's car loan, a corporation's bond purchase. On paper, it's all still yours, but in reality, it's been scattered across the economy like dust in the wind. It's a system that fuels growth, until it doesn't. Because the moment too many people ask for their money back, the illusion collapses. The bank doesn't have it, and the truth becomes undeniable. Money isn't a possession, it's a belief. That's why confidence is the oxygen of finance. When it's there, the system hums. When it's gone, everything suffocates. Bank runs aren't caused by a single event. They're caused by a single emotion: fear. One whisper, one rumor, one viral post saying the bank's in trouble, and suddenly thousands rush to withdraw cash. Doors slam, screens freeze, governments panic. And that's when the mask slips. The system that once served you begins to protect itself. Look at Cyprus again. When withdrawals began, officials didn't rush to defend depositors. They froze accounts, seized savings, and called it stabilization. In Argentina, the government justified locking up the people's money as a way to prevent total collapse. In 1933 America, Roosevelt's bank holiday wasn't about fairness, it was about survival. You see, governments and banks are bound by invisible chains. Banks need governments for bailouts, regulation, and legitimacy. Governments need banks to buy bonds, manage debt, and fuel spending. When crisis hits, they protect each other, not you. And the tools they use to do it are subtle but devastating. Deposit insurance, for example, sounds like security, a promise that your money is safe up to a certain limit. But dig deeper. In the US, the FDIC guarantees up to $250,000 per account. Sounds comforting, right? But if every depositor rushed to claim it, the fund would evaporate in hours. It doesn't exist in full. It's a psychological buffer designed to keep people calm. The same goes for government protections, capital controls, withdrawal limits, emergency decrees, all elegant phrases for one brutal truth. When the system falters, your access to your own money becomes optional. And when banks shut down, the consequences ripple like shockwaves. Businesses can't pay their workers, so layoffs multiply. Supermarkets can't pay suppliers, so shelves go empty. Investors dump assets at desperate prices, draining pension funds and retirement savings in the process. The government scrambles to restore order, but confidence, once shattered, is not easily rebuilt. And that's the cruel irony. Collapse doesn't happen because of a lack of money. It happens because of a lack of trust. Money itself has no heartbeat. It only breathes through belief. The moment that belief dies, the entire system, from Wall Street to the corner store, begins to decay. History shows this pattern again and again. Argentina in 2001, Cyprus in 2013, Lebanon in 2019, Greece in 2015, the United States in 1933. Every time the same story unfolds, a buildup of debt, a spark of panic, and then the government steps in, not to save the citizens, but to save the machine. And as people stand in lines, under the blistering sun or freezing rain, waiting for a few bills from a locked system, the realization hits. This isn't just about money, it's about control. Who decides when you can access what's yours? Who determines the value of your labor, your savings, your future? In Cyprus, middle-class savers woke up to find decades of careful work confiscated overnight. In Lebanon, pensioners discovered that their life savings had turned to dust. In Argentina, people banged pots and pans outside banks, shouting for the return of what they'd earned, and were ignored. And in each of these moments, one haunting truth echoed louder than any protest. You never really owned your money. The bank did. The system did. And when the system trembled, you were collateral damage. The digital age has only amplified this dependence. Most people today don't hold cash. Their wealth lives on screens. A swipe, a tap, a fingerprint away. But those same conveniences are also shackles. If your account is frozen, if your payment app malfunctions, if the grid fails, your entire livelihood can vanish with a single error code. This is the illusion of modern safety, a system so advanced, so connected, that it feels invincible, right until it isn't. Because all it takes is a trigger, a cyber attack, a debt crisis, a political decision, or a wave of fear that spreads faster than any virus. One moment you're paying for coffee, the next the terminal reads, "Transaction declined." Governments call these measures temporary, a bank holiday, a capital safeguard, a digital reset. But beneath the polished words lies an ancient instinct: protect the system first, the people later. And that's the truth most aren't prepared to face. In times of crisis, banks don't serve the public. They serve survival, theirs. The more we digitize, the more vulnerable we become. A simple power outage or software glitch could paralyze millions. A financial shock could freeze transactions worldwide. And in that silence, the reality of dependence would echo louder than ever. Wealth isn't power if you can't touch it. So ask yourself, if tomorrow your card stopped working, your bank app refused to open, and every ATM flashed out of service, how long before confidence turns into chaos? And as the panic spreads, the thin line between order and anarchy begins to blur. Streets once filled with commuters now echo with shouting, not of protest, but desperation. Store owners pull down their shutters. Parents trade what little they have for food or fuel. The world slows, not because time has changed, but because trust has evaporated. And then, just as suddenly as it began, silence. The networks flicker back online. The news channels announce that the system has been stabilized. Banks reopen cautiously. Withdrawals are limited, transfers delayed, but people exhale in relief, not because they are free, but because they are allowed to believe again. That is the cycle. Panic, control, recovery, forgetfulness. It is played out countless times, each generation convinced it could never happen to them. But history does not ask for permission before repeating itself. Look closer, and you'll see the pattern written in every ledger and loan. The banks exist not to safeguard your wealth, but to preserve their structure. Their survival depends on your faith. They sell you confidence, the illusion that what you own cannot be taken. Yet the moment that illusion fractures, they pull the curtain shut. In Argentina, families once considered middle class now barter goods for groceries. In Lebanon, doctors and engineers have fled, their savings erased. In Cyprus, small business owners never recovered. Each story ends the same way, not with villains or heroes, but with ordinary people left holding nothing but disbelief. And if you think the modern world is immune with its fintech apps, crypto exchanges, and digital wallets, think again. Every system, no matter how advanced, still runs on the same fragile foundation: trust. Because no matter how sleek the interface, how advanced the encryption, or how global the connection, the truth remains: money is not real until you can use it. That's why the lesson of every collapse is not fear, it's awareness. Awareness that resilience starts long before crisis. That diversification isn't a luxury, it's a necessity. That real security isn't in screens or servers, but in access, adaptability, and understanding. So as the digital age deepens its grip, remember this: when the system falters, it will not send a warning. There will be no alert, no countdown, no second chance to act. Only a quiet, sudden stillness, and the realization that safety was never guaranteed. The story of bank shutdowns is not about finance. It's about fragility. The fragility of trust, of power, of systems we believe are eternal. Because in the end, money is just a reflection of belief, and belief can disappear overnight. So the question isn't if it could happen again. The question is, when it does, will you be ready?